Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. Amidst a contracting economy, slumping demand, uncertainty of the pandemic continuing, and deteriorating macros of the Indian economy, it was, according to us, an important meeting of the Monetary Policy Committee of the Reserve Bank of India, which concluded today. This committee decides on India's monetary policy, which directly impacts the growth of the economy, and hence its decisions are extremely important for us. The MPC, according to us, had four critical issues in its agenda this time. The first one, whether there are going to be any further interest rate cuts in India. The second one, should the moratorium be extended? The present moratorium on bank loan repayment extends up to 31st of August, and after that, borrowers are going to be required to make payments to banks. The question was, with the economy being in the dumps, will there be another extension of the moratorium period? The third issue was, will loans be restructured? Will Reserve Bank of India come out with a general guideline in order to permit banks to restructure the loans of their borrowers? And finally, will there be any further monetary policy initiatives by the Reserve Bank of India in order to revive the economy, in order to stimulate demand? And according to us, all these were important issues. You'll recall that the MPC since February 2019 has been consistently pruning India's interest rates. Since then, interest rates have come down by the MPC by about 250 basis points, which is 2.5%. From March 2020 itself, the MPC has cut interest rates by 1.15%, which is 115 basis points. The market was expecting yet another interest rate cut because of the slump in India's growth. We at SW certainly did not expect any interest rate cuts at this moment. And the reason for that is that inflation continues to be high. There is a direct correlation between interest rates and inflation. And at the moment, inflation at 6.1% is way above the mandated target of Reserve Bank of merely 4%. We were therefore not expecting an interest rate cut. Another reason we were not expecting is that the cuts so far have not really been able to stimulate demand or the economy in a major way, and the Reserve Bank thus needs to think of other measures. The extension of the moratorium, according to us, was also a critical issue. Since the time the moratorium was levied in the last 6 months, the cash flows of borrowers have not improved at all, and therefore when the moratorium ends on 31st of August, they are all going to be in a crisis mode. They will not be able to repay their loans. Both the lender and the borrower are going to face extreme hardship and extreme difficulty in this matter. And thus, one expected that if the moratorium is not extended, some kind of a general guideline for restructuring of loans will come, such that borrowers can now approach the banks, get their loans restructured, get more time to repay their loans, and not default in the process. Therefore, one expected that decisions will be taken in respect of moratorium and in respect of restructuring of loans in tandem. And since the Reserve Bank of India has been remarkably consistent and proactive in taking decisions which are timely in order to revive the sagging economy, in order to support a slumping economy, and in order to stabilize India's banking and financial system, one expected that this time the MPC will come up with some out-of-box measures, with some unconventional thinking in order to revive India's slowing economy. What were the decisions of the MPC in this regard? The first one, the MPC decided that there will be no change in interest rates for the moment. It decided to leave the repo rate and the reverse repo rate unchanged. Thus, the repo rate, which is the rate at which the Reserve Bank of India gives money to the banks, has been kept unchanged at 4%. And the reverse repo rate, which is the rate at which banks give money to the RBI, has remained unchanged at 3.35%. The RBI did not bow to the popular expectation and demand, and in its wisdom decided to keep the interest rates unchanged. We are not surprised, as we told you, inflation has been on an upswing and interest rates needed to be kept where they are. The MPC also said that its stance remains accommodative. The economic environment has been deteriorating, it has been dynamic, it has been changing, it has been uncertain. And looking to that, the MPC decided that its stance is accommodative. In other words, as and when the situation demands, it would be willing to change its stance. And the MPC said that these decisions have been taken in order to achieve the Reserve Bank's mandated inflation target of 4%. The MPC and the Reserve Bank governor made some interesting and pertinent remarks in respect of the Indian economy and the global economy. They said that the pandemic challenge is one of epic proportions. It is an unprecedented challenge. They also said that the global economy continues to be fragile, and because of the threat of resurgence of COVID, because of the infection coming back, all the initial signs of revival which were there have weakened. They said that the economic outlook remains one of a slow, uneven and hesitant recovery, and the earliest that the recovery will start is going to be the second half of the current financial year at the earliest. They observed that the agricultural sector is the bright spot in the economy, and they also said that the entire manufacturing sector except pharma, the core industries and the export sector all remain in negative territory for the fourth consecutive month. They also observed that imports have fallen sharply, showing a weak domestic demand. The Reserve Bank governor further pertinently observed that the Indian economy continues to be under unprecedented stress. He said that there is extreme uncertainty on the economic front. The economic outlook is extremely uncertain because of the continuing pandemic. One doesn't know how long it will continue. One doesn't know when will it end. One doesn't know when will it come back. And one also doesn't know what kind of damage the pandemic will inflict on the Indian economy. And because of that, there is extreme uncertainty on the state of the economy and where are we headed to. With this in mind, the Reserve Bank governor made some further announcements. He said that the RBI is providing 10,000 crores to NABARD and the National Housing Bank. 5,000 crores out of this goes to the National Housing Bank in order to provide financial support to India's stressed real estate sector. He also said that a resolution window is being opened in order to resolve stressed deserving loans. In other words, a restructuring option is now being made available for those accounts which deserve a resolution, which is restructuring, without any change in the ownership of the entity, without making the account an NPA account. The RBI is now opening a window for the banks to restructure, to resolve all those cases which deserve a restructuring. And for that, he said that an expert committee is being set up under the chairmanship of Shri K.V. Kamath in order to suggest the financial parameters and sector-specific parameters that must be followed by banks in order to restructure, resolve cases. He also said that there will be extremely stringent supervision to see that this window is not misused by banks. The governor further said that MSME loans will continue to be restructured wherever they are deserving until the 31st of March 2021. In respect of gold loans, whose incidence is going up because of the stress that the household sector is facing, he said that banks will now be allowed to give up to 90% of the gold pledged to them instead of the earlier limit of 75%. And for the priority sector, he said that there are a number of regional disparities and the Reserve Bank is trying to iron them out. These were the main announcements that the Reserve Bank governor made today. What is the larger picture that emerges here? What is our opinion in this regard? In the matter of announcing initiatives and measures to revive the economy at this time, we think that the Reserve Bank has done a remarkable job so far. It has managed liquidity in the system. It has ensured that there is financial stability in the system. It has ensured that money supply is adequate and timely, and it has also been pruning the cost of money, which is interest rates, in a very calibrated manner. But according to us, after all this, in the matter of reviving the Indian economy at this stage, the Reserve Bank is at a dead end. The Reserve Bank, according to us at this moment, has run its full course. After all, except for interest rate cuts and liquidity, it has no more further options left in its arsenal in order to revive a sagging economy. And that's because the Reserve Bank has certain statutory limitations. In its domain is the monetary policy only, which is cost of money and supply of money in the economy. and the Reserve Bank has done all the heavy lifting that it can do in this regard so far. To repeat, it is now at a dead end. It is the government which needs to step in now. It is the government which needs to fire the fiscal guns. The government can no longer fire the guns from the shoulder of the Reserve Bank. It is the government which now needs to do all that is needed in order to revive, in order to support the economy. It is time for the government to act, because according to us, what Mr. Modi can do, Mr. Das cannot do at this stage. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, subscribe to our YouTube channel.